Thursday, October 5th, 2023. Market is right now open for 10 minutes or so, and I'm looking. Actually, I'm already looking. Well, market is pretty flat right now. The diamond spider is just flat. Right? I'm looking at some of the movers this morning that is being in the positive territories. And I'm looking at Tesla right now, right in front of me. All right. Here's the thing about Tesla. The Tesla, right? Although it came off this nice run, since Musk decided to step down from Twitter, and it finally refocused back on his core competency or core company, Tesla itself, that made a really nice run. I had a short buy, broken wing butterfly option strategy play, and I just got out, just flat got out, and over the flat, lost $5 on the whole contract, on each contract, but that's it was minimal. That's just little, yeah. So that made a run, right, and then make a second run with the market. When market turned, also it came off. Tesla is a big part of the index now, so yes, it got sold off. And then found a bottom, we traced that, and now it's going kind of like compressing into a narrow triangle. A very clear triangle. Very narrow triangle in this sense. So I was looking at it this morning, and it's above the white 21 days moving average. It just broke through yesterday and today. New high supposedly. This is a level 1 signal to go long. Right? Possible continuation of the previous run. So I take it to my level 2 indicators. Donchian channel, Heikin-Ashi candlestick, and it just broke through the middle. So I have two confirming signal that this is a long. This is a long trigger. Last time it do this and then it came back down. Never booked the low, and then it's doing this. Right. So in that sense, I can sell cash secure put. I can just buy outright, and my final stop loss will be this low. Right. And this is a considered stop loss, a close stop loss, but the big stop loss right here. So if a 1-to-1 risk will be, this will be a stop loss, this will be a profit target. But if I break this as a trend following play, I will add another leg to it when it break. So at $260, $261 to resistance a share, it's not bad, the pricing. The pricing is not as important as the actual setup of the play right now. The market itself, it just flat down a little. Now let's go inside the intraday. The market just opened, so we have very short, limited data. Go to the 1 minute. Wow, it's hugely compressed. Let's go to the 5 minutes, because I really don't like to use the 1 minute. Let's go to 5 minutes. All right. And you can see, matter of fact, let's go 15. Okay, there we go. Heikin-Ashi is trending. It's trending, it's breaking up and trend. 3 in here is approaching that. All right. So when it's close, this is the 15 minutes, so it's very different. This is where it's the buy, the breakout. This the 15 minutes breakout over here on these bar. Right here, pull back a little. Never really retested and took off again. Right, now it's at this point that do I open my position. Right, the 1 hour is already running on the top. One of them said, and go to the 4 hours. We clear trending. All right, broke here clearly. The next level is here or here. And if trading just only 1 hour, is too late to go to take a position. You missed the breakout, I missed the breakout if using the 1 hour indicator. So let's go out further to 2 hours. 4 hours and then 4 hours. Right. The further you go out, you realize, oh, you've crossed the midpoint and kind of missed that, right? But if you go back down into the compressed time frame, you might find something. I might find something. I'm looking at levels. Yeah. That's the difficulty. Even if you have an entry signal, where is the point? If you just use the daily graph, yes, you just go in when you break new high, and then the chances are it's going to come back and test these. You can wait for it to pull back, but who knows? But Tesla is a good candidate on the long, but now here's the thing. Look, earnings is coming up October 18. I'm not sure I want to carry this trade right now so close to earning. Tesla tends to be very volatile earnings, and chances are it will gap up or down. Who knows? Right? Last time it gapped down, but sometimes it gaps up. Like this one, it gaps up. It tends to gap when you go into earnings on this stock. It has the built-in volatility. So that's a more difficult play. If I have more time, 2 weeks, 3 weeks out on earnings, then I can let the trade develop. I can have additional information confirmation whether I want to stay with the trade or not. Right now, it's just too close for comfort. So that's the bottleneck. That's the difficulties. Even I have a level 1 signal, level 2 signal, nothing is ever perfect. That will be always other factor considered. Do you go in now, go in later, or post earning? But if I have move, and you playing this next level breakout. So let's put this on the burning board for now. Since the bull market was crapping out, right? I mean, this moving average crossed over. You can see the MACD is crossing right here. That's a signal. That's a signal. Right? My level 1, level 2, my moving average, candlestick. I have false hammer here. Missed this one. Now he's doing this. So it's a mini wave. Wave 1, wave 2. It might pull back a little bit more and then go again. So there might be times. I hope it just compress and go sideways for now, and then show its hand after earnings. That will be a good trade. So I can see some fundamental data. Of course, it's backward looking because it's last quarter, but still, give me some guidance, give me some projection, especially the guidance report, what they're seeing ahead. Beating earnings numbers is not as important as their guidance announcements, because that is about what they're seeing in the near future. The prospect of making money or losing money. That is much more important than just earnings number. Sometimes you have very bad earnings, but the guidance is very positive. People will just buy up the stock, will gap up and do all sorts of crazy things and start running up. Even the earning is bad. Even if they didn't make money, even if they were in the red. Because that had been in the past. They were booked. They were already all locked in. What's going forward, you don't know. Right? Stock is always looking into the future, 6 months ahead. That's what the stock market is looking for, future earnings. It's about the future, making money in the future, not from the past, not just from the past. Right? That all that data already factors in already. Right? But you can project based upon past data. Right? Year over year, quarter over quarter, month over month of the accounting data, right? Of their financial numbers. Yeah, I'm eager to take this trade, but this earning thing, I have to think. I have to let it absorb slowly, and the market just flat. The market just going compress sideways after like these consecutive down day. You have this big fall and you have this continuation, and then compress a little. Let's see. So QQQs. Picking up a little. Right, coming off its low spider. Which is a S&P 500 ETF tradable to the index instrument. Yeah. Everything is pretty much in the bear territory, so I have to keep that in mind. Even I'm so eager to look for long continuation of a trend from earlier this year, the first quarter of this year. Yeah. So let's continue to look at the major Magnificent Seven. Apple picking back up a little. It's a divergent signal, so yeah. So with that, let's look at Apple. Let's go to level 2 first. Let's go to Dow Jones channel. Okay, it's approaching the midline. So I marked this already for a trade, possible trade. Earnings have some time for earnings. Some news flash came out. Click on it and say Apple stock downgrade, US iPhone sales drop. Yeah, iPhone 15 is not. Yeah, overheating fix has not impact performance. Yeah, well, it just released iPhone 15, so yeah, so it's some growing pain, I guess. Anyhow, so Apple is a candidate. Google just did a clear course today. Yesterday it was doing this. It started trending. News on it yesterday. Earning is coming up. Tuesday, October. There we go. Tuesday, October 24th. So yes, this month we're gonna see earnings. This is an earning month. So it's gonna be interesting. Question again. Do I initiate long? So level 2 indicator, say go. Back to level 1. Let's see, where is that? Level 1. This is the whole box of consolidation. A clean breakout would be the real big trade of the market behind it. I had a reversal signal, MACD on this. So the better play, this will be a little early. The better play is actually a breakout and then it pulls back. You buy the pullback, not just even on a pure breakout. And you ask me why? Because of this, or because of this divergence MACD signal that I had that signified reversal before, right? This whole momentum is coming down while the actual is making new peak on the stock itself. My MACD is coming off. So we have multiple. Suppose this is a reversal, it didn't happen. This is reversal, it happened. Right? So it could be the case, it didn't happen yet. Right? So this one, I want to break out, pull back in that sense if I'm going to go long. Yeah, I have to be very patient. There's no need to rush to anything. If the market is behind its back, yeah, I will open this trade on long. But the market right now, the problem is the market is. Let's go back to the level 2 Dow Jones channel. Let's look at the market. The index itself is SPX is on the bear section. Nasdaq is in the bear section. Of course, DJI definitely in the bear because it just crapped out. Matter of fact, this trend has not stopped yet. I need 3 consecutive green bar on the Heiken Ashi candlestick to signify a possible change or a possible end of this trend, this huge downtrend. It is like a month long downtrend. Almost. Yeah, how many bars I say? Blockade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days. So that's 2 weeks. It crept out, it trend down for 2 weeks on the Dow Jones Industrial Index. So that's worrisome. It clearly broke that level. The next level is haven't approached yet, but it's over there, so it might play there. The fundamental is not there on the broader market. As I always say, 50% of the stock is the broader market. Because of ETF, 401k that pour into this index instrument, and then you get redistributed into the underlying holdings, part of the index. So a big part is the market. If the market is behind you, that's a lot more advantageous. And there's another part is the sector, then finally the stock itself. I mean, the ratio can change by over exaggerating 50%. However, you really look at it, is that if you have wind behind your back, you travel much further on that direction. Right now, since I'm looking for longs, continuation of the trend from earlier this year, I don't see the reason to initiate, to jump in yet. I see the reason on the individual stock basis, but the wind is not behind my back. Yeah, that's the thing. That's that. Sucks, right? SOXX. Here's the thing. SOXX. Where is it? In the downtrend channel. Okay, it's a midpoint between it's below, so it's in the bear sector of the downtrend channel. Is a midpoint, came off the low. I really need to approach back here for me to even really consider. If the bull market is above in the bull territory, the sector index are in the bull territory, then definitely, well, the stock definitely is in the bull territory. Those will be good buy. I don't mind waiting later. Then it's better than position early. So let's go back to Apple. Apple looks like it's approaching it. Some of it is actually above, right? Like Google is above it, above this. Right? So Google, on relative strength basis, this is a better buy than Apple, because this is still below the midline of the downtrend channel. Right? Downtrend channel this is 20 bars volatility base, and it will compress and expand, depends on how wide the previous 20 bars are. So that helps me to find the midpoint and divide everything into half. Is a bull and bear. That's what it does. It gives me a visual representations. Every technical indicator has a reason and story behind it. You have to understand, oh look, Meta has been above it. But guess what? It just flatline right here. It's just inside this. So clear this peak will be a trade. Clear this pit is zero. Clear, bounce, reach here, bounce back, could be a trade. So that's multiple possible setup. But on relative strength basis, so Google and Meta is the better choice to go bull over Apple. Of course, these relative strength can change, right? Who's weak, who's strong, they do change. So if I buy this, go across, I buy this right now, but the bottom market and the index not behind me. So I have only 1/3 of the puzzles that's going for me. That's not enough. Open the trade. It's still early. Yes, I might be late to the game, but I'd rather be safe than sorry in that sense. Yeah. I'm very eager to actually get inside. I didn't say a really well trade yet, so we're already 1 week into October, and I already trade, but it doesn't work that way. You must be patient. Yeah. On the other hand, if everything is ripping up, even with the earnings, I have everything on my side, then yeah, more likely I want to open it to trade. That's always the difficulties. Even you see the setup here and there will always pieces that is telling you, oh, is not completely lined up yet. But by the time if you wait for complete lineup, that's probably too late. Then it will be probably up here and break this clearly already. Here's the thing. So you have to find a balance. I have to find that balance. I have to find a balance. The indicators that tell me to go in, open, or add the position, versus the indicators tell me, no, this is not right yet. As always, this infighting. Always this scale is tipping one side or the other, and you kind of nudge it a little yourself and decide, do you or do I take the trade? Right now, I think it's still early because the bottom market was ugly. 2 weeks of this is pretty ugly. I would rather say continue to go down a little bit more, test. I want to see some tails, some buyers, real buyers comes in, real buying action. Some false hammer candlestick. I want to see those. I want to see hammer or doji style. I want to see volume spike and buyers comes in. And that will be a much better signal than right now. I'm trying to pick the bottom. Bottom picking is it's always a little hard. What happened to my volume? Oh, of course, that's no volume one. That's an index. That's not even the tradable. That's why I was like, where's my volume balls? There we go. Yeah, the stock, of course, these are tradable. Apple, even on that, if you look at Apple on my level 1 indicators, my moving average is below down here, although it's, so it has some point, some way to go. I'd rather it's already re-established a long trend and then pull back than try to pick the bottom. I've learned enough, I've played enough trying to do bottom picking to avoid it. There's a reason why it's at the bottom. The bottom market, the sector, the macroeconomic environment, and the stock itself. Right off my mind, it's like, oh, just that is not enough conviction for me to actually go in. Yes, I see setup, but those are individual indicators. When you combine everything, put all the picture puzzles, all the variables together, all the factors together, it will tell you, no, it's not right yet. It's not the time yet. Just because one indicator or two indicators tell you, oh, the setup is there, it trigger a trade, you have to consider all the other factors. That's how you become a better speculator, better investor, better trader. Because you got to consider all of these different A, B, C, D, E, F, G factors. Of course, when they all lined up, the stock already run, you will be too late. So you say, okay, 50%, 60%, these indicators are important and the environment is pointing you that is going towards that direction, probability-wise will continue in the direction. You cannot wait for everything to line up because they're always too late. But if only one or few factors out of the many factors lined up, that's not enough. You want to at least push it towards over 50% of your indicators, your analysis, all the important factors. And these factors change all the time too. You keep yourself abreast of these factors. What are important right now? Like right now, interest rate is important, the Fed is important. So those are part of the big macro picture you have to keep in mind. And when they make changes, or they talk about changes, it will affect the market. And you will affect your underlying holdings. So this game is fun. This game is a lot of analysis, a lot of things to consider. You're constantly thinking, and a lot of times I tend to overthink in actuality. But that's a good thing. You rather want to overthink than underthink, because you realize, oh my God, did I miss something? I didn't see it. That's why I got steamrolled, because you failed to consider that or this. So you rather overthink, and then you start chopping off, right, by process of elimination, and put different weightings on different factors. Right now, one biggest factor is actually the market that have been crapped out for 2 weeks. I need to find a bottom. I want to see buyers coming out. I want it to recover to a certain degree. All right. Ideally, is looking at the IA, right? So we can do a Fibonacci, a basic, very simple, fast Fibonacci. Did I get my Fibonacci out? Okay. I want to get my Fibonacci. I want to see how much you need to retrace for it to back above this drop. Okay. At least the midline. Okay. So right away it tells me 344 is the green, the red line, and so right here, this is the midline. I wanted to go back above this critical level. Then it go put the trend back in play, put itself back in the bull bias in that sense. So yeah. So that gave me an idea mathematically where things are on this drop. And this signifies an important level for it to go back in the bull. Consider bull market, at least for me, of this drop, this retracement from this. Right? So yeah, when the market go back up and approach these levels, yeah, definitely I would be more. It's better to take long under those circumstances when the market is in a bull mode and everything is down. Even the bulls can be very short-lived because the bear is in charge right now, and they can get slaughtered really fast. So that in that sense, and this is why even my level 1, level 2, some of the stock are triggering a trade on the bigger macroeconomic factors. I need to hold back and wait and be more patient. Okay, let's move on. Amazon, Netflix. Yeah. A lot of time that's the game too. Trend followers always a little late to the game because the trend can't like move up already. We're not bottom picking. We're just latching on what had taken place and project that it will continue. We're not trying to tell the future, be a fortune teller doing bottom picking. I tell you, majority, 70% of my bottom picking plays fail because I'm going against the broader trend, and I have learned to stop doing that very early in my career. Because that's where I rack up huge losses. So stop doing things that make you lose money. That's the first step to making money is stop taking losing trade, right? Yeah. Ooh, NVIDIA, of course. Look at this. I right away, I see a line. Nice support line. Let's put a nice support line here. Yeah, very nice line. If I would touch this too, it did. No? Okay, that's fine. Yeah. So everything is in this compressed convergence point. Right? It's the 7-day, the 21-day, the 5th day is very close by, and it's going to get compressed. That signifies telling me that everybody's taking a breather. Everybody's waiting for confirmation, waiting for the market to show its hand. Does it want to crap out, continue to go down, or it's going to turn, or it's just going to sideways and keep giving us inside bar, nothing much. I think earnings will be the big factors this month, and we'll see a lot of that right now. Yeah, the market already crapped out. It doesn't want to come back yet, but it doesn't want to go down, seems like. But it's still too early because those are huge momentum when the market coming down like that. Yeah. That was a momentum down. Basically, yeah, the environment. Diamonds on the 200 days moving days average. A lot of pressure. Pressure. Spider. Just slightly above it. QQQ is a bit more over it. But they're all even under the moving day. 7 days, 21 days, 50 days moving average. So they're all in bear territories. And yeah, the individual candle bars, the downtrend channel tell me, yeah, signal going on, but the moving average, the border market, all that signifies that no, we're not in a bull territory yet. We're not even out of the bear territories. Things are still grooming, so I have to hold off going long. Yeah, I was in the middle of locking in. I was like, oh, I want to take these trade. I want to. Oh. Yes, but no. Yeah. And that's always the case. You find reasons to go long, and now you find counter reason not to take the long. And then you start weighting each individual factor. And you put them all together, your macro, your micro, your chart, your fundamentals, put them all together and you realize, hey, still too early. Let's wait. Yeah, that's about it this morning. I mean, the market is just flat. Some instruments are moving, signaling a potential long play, cross over the mid downtrend channel. I got very excited on those. It's approaching those area, but still in bear. So yeah, it's difficult. It's difficult to take the trade. Of course, when you turn around, we'll be doing a breakout then instead of crossing over the midline of downtrend channel. Now here's the thing, crossing the midline, you might do this, or crossing the midline, do this and then come right back down. You just don't know. Or in a bear, cross, come back down too. So this is why, here's the thing, listen to this closely. If it's a downtrend crossing the midline, does not mean initiate the trade. It tells you you should get off your trend following. That's a signal to close the trade and take profit in actuality. And on the long side too, it goes back and calls back down the midline. Well, take some profit. At least take some profit. Because they might do this before it resume itself. They always go back in. Cross the midline, let it do its thing, and then when it calls back up, you can go back in or wait till the break the previous top, and then you take another level on the position. So yes, this is on back of an uptrend on itself. Google on this daily uptrend. Yes, this if you already had a position, you took some profit, you get back in. Yeah, but not as big as when it breaks up. And the market, everything else behind it. That will be the bigger trade. That will be the better trade right now. When it start breaking out, break out, and retrace, and you see confirmation of buyer, false hammer again, then go in. There's many ways to play this, but right now, this is a weaker signal of a momentum break and volume spike and a market behind it. I'm just saying. This is a breather. You can't just come back down because the bottom market might do that. Yeah. Although this stock itself, Google, Alphabet itself, is clear on a nice uptrend, and I can actually have turned into considered green bar and is running. But the better play is if you do this, the cross midline, you might do this, a flat line going side. Eventually, you break the top, you get in. After it broke, get in here and then just hold on to it until you cross again, get out, get back in. Right now I don't have positions, there's no reason. This is more take your profit, see what it does when it comes off, and then get back in if you already have a position. Yes, it's a hard call. Here's the thing, if you already have a position, you gotta get back in. Or do you initiate the position? Again, no, not yet, because the market was carving out. Let's let the market filter all this, digest all this 2 weeks of momentum down first. Right, look, this is momentum. I mean, this is a volume and then start rolling. Right. Let's look at the volume. Volume day. Okay, that signifies the end of the trend. This signifies potential breakup, and it did. So yeah, the volume spike is big. So I want to see a volume spike first. At least a volume spike. Give me that. Without that, I'm not seeing the end of this down move. It would be great. I mean, sometimes it doesn't give you that clear indication. But if it does, and when it does, it gives me a very good indication that, okay, maybe then at least the downtrend has slowed and stopped. Then the crossover become a better signal combined with that factors, other factors. Right now, we just don't have that. We just don't have that. And yeah, we don't have that. Still early. The border market, just not there yet. Just not there yet. And it's very painful. Gosh, I want to take a trade. I want to open this trade. And nothing is harder than you see trade setting up, and then you find these factors. Say, okay, I gotta hold off. I gotta be patient. So now I'm sitting here throwing my thumbs again. I want to see my Christmas tree, my portfolio start blinking, red, green, moving. I'm making money, whatever. I want to have something. But no, it's not right. The timing is not there at the time. Has to wait. Have to wait for this. So yes, that's about it this morning. I gave a very clear picture of what I'm seeing, what I need, what I anticipate, and what could happen. And if those anticipation materialize, then I can really go inside the trade. It's still a little too early right now, so I have to be a little bit more patient. Maybe tomorrow, maybe next week, maybe even later today, they start giving me this volume spike. I try to push it down further, and then I just come back in. I see it intraday. I see it across the volume spiking. I see buyers buying bars and all these turnaround signals. Then yeah. Right now, I still have to wait. I have to be patient. Yeah. Okay, that's about it for this morning. Thanks for watching, and then until next one.